I put $100 into 5 completely different investments for 30 days. Bitcoin, index funds, a high-yield savings account, gold, and one investment you'd never expect. One of these turned my $100 into $127. Another lost money. And one of them, well, that's the one that surprised me the most. Here's what happened when I put real money on the line to find out which investment actually works best for beginners. Okay, so here's how this experiment worked. I took $500 total and split it into 5 equal parts of $100 each. The rules were simple. First, I could only use platforms that anyone watching this video could access today. No special requirements, no insider connections. Second, I tracked everything, every fee, every price change, every single dollar. And third, absolutely no touching the investments for 30 days. No panic selling, no moving money around. Just invest and wait. Now, I'm going to reveal these from worst performer to best performer, so stick around because the number 1 spot is going to shock you. But first, let me tell you about the investment that actually lost money. Investment number 5, Bitcoin. I put $100 into Bitcoin using Coinbase, and after 30 days, my $100 turned into $94.23. Yeah, I actually lost money. Here's what happened. Bitcoin dropped about 8% during my 30-day window. Now, normally this wouldn't be a huge deal because crypto is volatile, but here's the kicker. Coinbase charged me a $2.99 fee to buy the Bitcoin. That's 3% right off the top. So even if Bitcoin had gone up slightly, I'd still need it to beat that fee just to break even. The lesson here, crypto can make you money long term, but short term, it's a roller coaster. And those fees add up fast when you're starting with small amounts. Would I do it again? Yes, but not for 30 days. Bitcoin is a 5 to 10 year play, not a 1-month experiment. Investment number 4, a high-yield savings account. I put $100 into a Marcus by Goldman Sachs high-yield savings account. After 30 days, my balance was $100.42. I made 42 cents. Now, before you laugh, let me explain why this isn't as bad as it sounds. This is the only investment on this list where I had zero risk of losing money. Its FDIC insured up to $250,000. While Bitcoin was dropping 8%, my savings account was steadily earning 5.1% APY. But here's the catch. That 5.1% is annual. Over 30 days, it breaks down to about 0.42% of my money. The math checks out. The real power of high-yield savings isn't in 1 month. It's in keeping your emergency fund somewhere that actually earns you money instead of a regular bank paying you basically nothing. If this was my emergency fund of, say, $10,000, I'd earn about $500 a year instead of $1. That's real money for doing absolutely nothing. Investment number 3, gold. I bought $100 worth of gold through a platform called Vaulted, which lets you buy fractional amounts of physical gold. After 30 days, my investment was worth $103.80, a solid 3.8% return. Not bad for a month. Here's why gold did well during my experiment. There was a lot of economic uncertainty in the markets. Inflation fears, geopolitical tensions, you know the drill. When people get nervous about the economy, they buy gold. It's been that way for thousands of years. Gold is the ultimate safe haven investment. But here's what you need to know. Gold doesn't pay dividends. It doesn't grow a business. It just sits there, and you're betting someone will pay more for it later than you did. Over the long run, gold typically just keeps up with inflation. It's not a wealth builder, it's a wealth preserver. Most experts recommend keeping 5 to 10% of your portfolio in gold as insurance, not as your main investment. I got lucky with timing. In a different 30 days, gold could have easily been flat or down. Investment number 2, an S&P 500 index fund. I put $100 into VOO, which is Vanguard's S&P 500 ETF. This is basically buying a tiny piece of the 500 largest companies in America. Apple, Microsoft, Amazon, all in one. After 30 days, my $100 turned into $104.60, a 4.6% return in 1 month. Here's why this one is special. The S&P 500 had a good month. Tech stocks rallied, corporate earnings were strong, and the overall market was up about 4.5%. But what makes this investment brilliant is the fees. VOO charges just 0.03% per year. That's $3 for every $10,000 you invest. Basically nothing. And here's the real kicker. Over the last 50 years, the S&P 500 has averaged about 10% returns per year. Some years it's up 30%, some years it's down 20%, but the average is around 10%. If you invested $100 a month into an S&P 500 index fund for 30 years at that 10% average, you'd have over $200,000. So why isn't this number one? Well, because something else performed even better. Investment number one, individual stock, Nvidia. I put $100 into Nvidia stock. After 30 days, my investment was worth $127.30, a 27.3% return in 1 month. Now, before you run out and buy Nvidia, let me be very clear about something. I got extremely lucky. During my 30-day window, Nvidia announced better than expected earnings. The AI boom continued. Everything went right. But here's what could have just as easily happened. Nvidia is one of the most volatile stocks in the market. In a different 30-day period, I could have lost 20% or 30%. This is the difference between investing and gambling. With an index fund, you're betting on the entire economy. With individual stocks, you're betting on one company. Most financial advisors say 80 to 90% of your portfolio should be in diversified investments like index funds. The other 10 to 20%? That's where you can take risks on individual stocks if you want. And if you do buy individual stocks, you better do your homework. Read the financial statements, understand the business, know the risks. I wouldn't recommend putting your first $100 into a single stock. But if you have a diversified foundation and want to take a calculated risk, individual stocks can pay off big. All right, let's look at the final rankings. Number 5, Bitcoin, down 5.77%. Number 4, high yield savings, up 0.42%. Number 3, gold, up 3.8%. Number 2, S&P 500 index fund, up 4.6%. Number 1, Nvidia stock, up 27.3%. Total across all investments, I started with $500 and ended with $530, a 6% return in 30 days. But here's what I actually learned from this experiment. Lesson 1, time in the market beats timing the market. I got lucky with Nvidia, but luck isn't a strategy. Lesson 2, diversification works. Even though Bitcoin lost money, the other investments balanced it out. Lesson 3, fees matter. That 3% Coinbase fee on a $100 purchase is huge. At larger amounts, fees get smaller, but when you're starting out, watch those fees. If I had to build a beginner portfolio with these 5 investments, here's what I'd do. 70% S&P 500 index fund, 10% high yield savings for emergencies, 10% gold, 5% individual stocks for fun, and 5% crypto if you want to speculate. If you want me to do more experiments like this, hit the subscribe button. Next time, I'm thinking about testing different passive income strategies with $100 each. Thanks for watching, and remember, the best investment you can make is in yourself and your financial education. See you in the next one.